PE ratio is the price to earnings ratio of a stock, which I know sounds very boring, very technical, but it's really important to understand when you're talking about equity investing, stock investing. So let's take a really basic example. Think about your favorite neighborhood coffee shop. Let's say it's earning $100,000 a year in profit. If someone offered to sell you that business for $1 million, you're paying 10 times the annual earnings. That's a price to earnings ratio of 10. If someone wanted $5 million for that exact same profit stream, now you're paying 50 times earnings. Same business, same profits. The only thing that changed is how optimistic the sellers are and the buyers are about the future. That's what worries AI bears. It's not just that these companies are expensive, it's that investors are paying prices that assume near perfect execution for years. The higher the price relative to what the business earns, the bigger gamble you're taking on how well that company will do in the future. The second pillar of the bear case is what they call the circular capex boom. Another very technical, somewhat boring term, but stay with me because it's deceptively simple. Mega cap tech companies are spending billions of dollars on NVIDIA's AI chips. This spending fuels NVIDIA's record breaking revenues. NVIDIA's soaring stock then lifts the entire market, including the very tech companies that are its biggest consumers. But bears see a house of cards. What happens if one of those big customers cuts back on spending? NVIDIA's own filings show that just a handful of clients account for a massive portion of its business. So it's this circular revenue valuation idea that can't forever support itself. And third, there's the critical distinction between hype and profit. While the narrative is about an AI revolution, the reality on the ground is a lot more complicated. Multiple analyses and studies indicate a very high failure rate for enterprise AI projects, with many failing to deliver any meaningful financial return at all. And recent research has shown that a staggering number of enterprise AI pilots fail to even reach production, let alone deliver a positive ROI.